Welcome to the Money Talks channel. What if I told you that a piece of code written by an anonymous creator could disrupt the entire global financial system? In 2009, a person or group known as Satoshi Nakamoto released a white paper that changed the world forever. They called it Bitcoin. At the time, it was worth nothing. Today, it's a trillion-dollar asset class. But what actually is it? Is it a currency, a digital gold, or just a massive bubble? Whether you're a seasoned investor or someone who just heard the word crypto for the first time, today's video is your definitive guide. We're breaking down what Bitcoin is, how it's born, and where the experts think it's heading. Let's dive in. At its core, Bitcoin is the world's first decentralized digital currency. But to understand why that matters, we have to look at how money usually works. Normally, when you send money to a friend, you rely on a middleman, like a bank or a credit card company, to verify that you actually have the money. Bitcoin removes the middleman. It operates on a peer-to-peer network. No central bank, no government, and no CEO. It's governed by math and code. Think of it as a giant public ledger called the blockchain. Every single transaction ever made is recorded on this ledger. It's transparent, it's permanent, and most importantly, it's immutable, meaning no one can go back and change the numbers. It is trustless money. You don't need to trust a bank. You only need to trust the laws of mathematics. You can't just print Bitcoin like the Federal Reserve prints dollars. New Bitcoins are mined. But don't grab a shovel just yet. This is digital mining. Bitcoin miners use powerful computers to solve incredibly complex mathematical puzzles. This process is called proof of work. When a miner solves a puzzle, they earn the right to add a new block of transactions to the blockchain. As a reward for their work and the electricity they use, the network grants them newly created Bitcoin. This is where it gets interesting. Scarcity. There will only ever be 21 million Bitcoins. Period. This is hard-coded into the protocol. Every 4 years, an event called the halving occurs, where the reward given to miners is cut in half. This reduces the supply of new Bitcoins entering the market, creating a digital gold effect. While central banks can print unlimited amounts of fiat currency, causing inflation, Bitcoin is designed to be deflationary. For years, Bitcoin was seen as a toy for tech geeks or a tool for the dark web. But the narrative has shifted. We are now in the era of institutional adoption. In 2024, we saw a massive turning point with the approval of spot Bitcoin ETFs. This allowed Wall Street giants like BlackRock and Fidelity to offer Bitcoin to traditional investors. Companies like MicroStrategy now hold billions of dollars worth of Bitcoin on their balance sheets, treating it as a primary reserve asset. Why? Because in an era of high inflation and global instability, Bitcoin is increasingly seen as a hedge. It's a way to opt out of a system where your savings lose value every year. It's borderless, censorship-resistant, and can be carried across the world on a thumb drive or even a memorized seed phrase. Now, for the million-dollar question, where is the price going? Predictions vary wildly. On the bullish side, analysts like Cathie Wood from ARK Invest have projected that Bitcoin could reach $1 million per coin by 2030, driven by institutional flow and its potential to replace a portion of the global gold market. They argue that as the digital native generation gains wealth, they will choose Bitcoin over physical gold. On the bearish side, critics point to regulatory risks. Governments don't like losing control over money. Increased taxation or outright bans in major economies could cause massive volatility. Furthermore, the environmental impact of mining remains a heated debate, though many miners are now pivoting to renewable energy sources. The reality? Bitcoin is a high-risk, high-reward asset. Its history is defined by massive bull runs followed by painful crypto winters. But with every cycle, it has reached higher highs and established a more solid foundation in the global economy. Bitcoin isn't just a ticker symbol on a screen. It's a technological breakthrough. It represents the separation of money and state, an experiment that has survived for over 15 years against all odds. Whether you think it's the future of finance or a speculative gamble, one thing is certain: Bitcoin is here to stay. Before you invest, remember the golden rule of crypto. Only invest what you can afford to lose, and always do your own research. The world of digital assets moves fast, and being informed is your best defense. Before we wrap up, remember that in the world of finance, knowledge isn't just power, it's profit. If you want to stay ahead of the curve and master the language of money, make sure to hit that subscribe button and join the Money Talks community. We're curious to hear from you. Is Bitcoin the ultimate digital gold? Or are you still skeptical about the crypto revolution? Drop your thoughts in the comments below. We read every single one. If this video helped you understand the future of finance a little better, give us a like and share it with someone who's still trying to figure out the blockchain. Thank you for watching, stay smart with your investments, and we'll see you in the next episode of The Money Talks.